Probably two of the most popular questions that I get asked is, first, how do you invest your money? What's the best strategy? And second, how do you beat the stock market? So, one way to beat the stock market is simply investing in a dividend growth portfolio. These are stocks that are paying dividends but are still looking to grow as a business as well. As you can see, dividend growth stocks beat the stock market on average over the long term. The second thing that I like to say to people who ask me these questions is look at what the experts are doing. One of the smartest ways I believe any investor can invest is by looking at what the experts are buying into and then analyzing the stocks themselves, see if it offers a solid return and fits in with their portfolio. Honestly, pretty much every smart investor, legally they have to disclose what they invest in, so why not take advantage of this? It would be stupid not to. Anyway, so what we're going to do in this video is look at 3 dividend stocks that some experts are investing in. We're taking a deeper look into the company and seeing if they're a potential buy or not. These 3 stocks pay a higher dividend yield than most and are definitely ones to look deeper into and see if they fit in with your portfolio. Anyway, let's get into these 3 dividend stocks that experts are buying into. Don't forget to subscribe and drop a like because that's always cool. Okay, so I want to start off with the experts above all experts and look at Warren Buffett. So Warren Buffett's investing company called Berkshire Hathaway has been making some interesting purchases lately. One of those purchases is a stock by the name of Suncor Energy, which pays a dividend yield of 4.1%. So the appropriate thing to do is first tell you a little bit about this dividend stock that Warren Buffett has been buying into. So, Suncor Energy is a Canadian energy company with various parts to it. The key with Suncor is to develop Canada's petroleum resource basin. Suncor are extremely well diversified as they have a network of 280 company-owned and 200 customer-operated retail and diesel fuel sites. But essentially, Suncor, they have 3 business segments. First is the oil sands, second is the oil exploration and production segments, and third is the refining and marketing segments. The company is extremely well diversified based around oil in Canada. And Berkshire Hathaway, not too long ago, about 6 months ago, bought into the stock. They bought around 10.8 million shares in the company, which was around $300 million of the stock. Okay, what we need to do now is take a look at Suncor's dividend history. So Suncor, they've paid a dividend for 23 years now, and generally speaking, they have been pretty good and consistent with the dividends that they pay. As you can see, that pretty much, throughout history, they have been increasing that dividend. They've been pretty good with it. Apart from that last financial crisis that we had in 2008, where Suncor cut their dividend dramatically. Obviously, that's not the greatest thing, but you got to give it to them because just basically 1 year later, they increased the dividend to pretty much the same amount that it was before. 2 years later, the dividend was more than what it was in the financial crisis, before the financial crisis. So, keep that in mind. If you think there's going to be a financial crisis soon, don't be the type that panics and sells quickly because Suncor drops their dividend. Obviously, guys, this is a stock that you need to research and see if it fits in with your portfolio. Anyway, at the time of making this video, Suncor are selling for a price of $31. Buffett would have bought into the stock around this price here, according to the regulatory findings. So you're most likely going to get a similar price to him. Suncor, they pay a dividend of $1.27 per share, which gives them a yield of 4.1%. And they earn $2.27 per share, so the payout ratio is 56% of their earnings. So their dividend yield could technically be a lot higher. Anyway, let's move on to the next dividend expert and see what he's buying into. Okay, we'll move on to one of my favorite all-time dividend investors, a guy by the name of Dividend Sensei. He's an investor who writes for Seeking Alpha, and his portfolio is purely focused around dividends with the goal of retiring fully off his dividend portfolio. That's one reason he invests in dividends. The other reason he likes dividends is because on average, they beat the stock market, especially dividend aristocrats like this stock, which we're going to talk about now, 3M. 3M, I'm not sure if you guys have been following this stock, but it's actually one of those stocks that has had a really big crash recently. It crashed over 25% in about 10 days, but now it has started to recover. Anyway, what I really should be starting with is, what do 3M do as a company? So 3M is a company based in Minnesota. They're focused in the fields of industry, worker safety, healthcare, and consumer goods. If you look at the products that they produce, it's actually very interesting. It includes, fire protection equipment, personal protective equipment, dental products, medical products, car care products. It's a big range that 3M have got. And the very interesting thing about 3M is that it is actually a dividend king. Okay, so for those who don't know what dividend king is, dividend kings are stocks that have increased their dividend payments for over 50 years in a row, and 3M has a 60-year track record of increasing dividends. Generally speaking, you can trust the dividend that 3M put out because they've got a massive track record of increasing their dividend. And at the moment, they are generating a yield of 3.3%. And recently, Dividend Sensei made a list of the top 5 dividend kings to buy today. And 3M was at the top of that list. It showed a discount to fair value of 27%. That's at least according to his model. Expected 5-year cash flow is 6.4%, and the valuation adjusted return, or just the expected return, is 12.7% in total for 3M. If you're looking for a stock that pays a solid dividend yield, a consistent dividend yield, 3M is one to look closer into, but you must make sure that you do the full analysis of the stock, like calculating its value, which, we talk about in the full course on how to invest in stocks. Obviously, the link to that is in the description. But guys, let's move on to our last dividend stock by the expert. Let's finish off with the greatest expert of all time. We started off this video with the best investor in the world, so let's finish off this video with the best investor in the world, Warren Buffett. Warren Buffett has owned Kraft Heinz stock for a number of years now, and he has come out with statements saying he'd love to own the company in 10 years from now, and that Kraft Heinz has his full confidence. Kraft Heinz, it's a stock that has had a massive crash in early 2019, and to date it has fell 35.5%. But as you can see, the stock has started to stabilize more as of recently. And anyway, the nice thing about the crash is the fact that because it has crashed, it now has a really nice dividend yield, 5.15%. But before we talk any more about the stock's price, it's probably best that I quickly explain what the company actually does. Kraft Heinz is the 3rd largest food and beverage company in North America and the 5th largest in the world. Here is a picture of the brands owned by Kraft Heinz. These brands include Kool-Aid, Waddies, Jell-O, Golden Circle, Philadelphia. There's some really big brand names here. Now, as I've already mentioned, Kraft Heinz have had a pretty big crash recently, and if we look at the revenue and earnings, it's pretty obvious to see why the stock had crashed. In the 2018 figures, they had this massive write-down of $15.4 billion, and thus their earnings was absolutely terrible. Also, if you look at their revenue, it hasn't been doing so great over the past couple of years. It's gone down slightly. And that's why the stock has crashed. But then, I have to show you the other side of the coin, and that is that because of the crash, the stock has now a really high dividend yield, over 5%. Also, they're a food company, which is a group of products which will always be in demand no matter what market condition. People need to eat. Then also, they have the full backing of the greatest investor of all time, Warren Buffett, who owns 26.7% of Kraft Heinz. I mean, at the end of the day, it's all about risk reward, and if you can look into and understand this situation better, there is potential there with Kraft Heinz stock. Just make sure you do your research before buying. So guys, those are 3 dividend stocks that I would recommend looking closer into. Those are 3 dividend stocks that either experts are buying into or experts own. And they do pay a pretty decent yield. Tell me what you think of these 3 stocks in the comment section below, and stay tuned for the next video, which will probably be talking more about dividend stocks.